Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it's Thursday, and it's been a pretty eventful week. You know, started off the week, the markets were on the defensive. Last week, markets broke that 2100 level, that 2100 to 2107, giving you about a 30-handle down move in the S&P, about 1.5 to 2%. Then Tuesday, a little bit of a reversal, so RDRs across the board. Good spot to maybe cover some shorts if you've been short, maybe a spot to test some longs. Then Wednesday, boom, to the upside. Gap and go. Today, didn't open up lower, didn't trap the bulls, actually gave some guys some follow through. Depending what stocks you owned, what sectors you were in, or where you trim and trailed, you were able to get some follow through to the upside before coming off the highs a little bit, and that makes sense, right? Big 3-day move from the lows. You look at the chart of the S&P, you'll see, this was, if you look pretty, if you always look back, it always looks a lot more methodical than when it's taking place because you have the emotions in check. So here is where you had that inside wedge when we were all watching that 2100 area, that 2107 broke below. That's when a lot of us took risk off. Some people had the wherewithal to get pretty short there. And if you did, you know what? You got paid. 30 handles to the downside. Then finally, a bit of a red dog reversal, we call it, when it trades below a prior low, comes back. Didn't close so much above. It's not like it closed on the highs of the day, giving a blaring signal, that you had a good, clean reversal. So some guys might not have taken that. But anyway, it was enough for me to be long. And then on Wednesday, it closed, cleared this 2085. Big day Wednesday. Okay, and then today into resistance, it sold off a little bit. So now the question is, what's next, right? What's next here? So I would think, maybe some inside action. I'd love to see perhaps a little packing and filling in here. Build a little bit of a range. A basing higher. That's what I said on Fox Business today. If you want to look. Somewhere around 2090-ish, okay, which is about, if you look just real quickly, we could do some fibs. You take a look here from the low, okay, which was Tuesday's low to today's high. The 25% Fibonacci retracement of just that move is right at 2105, so a little bit lower. Really, really strong markets hold that. Okay, I'm not saying we're in a really, really strong market, so you definitely don't have to be all in here. The 0.38% retracement comes in a little bit below 2100. So I would think if we're in a methodical tape, that's kind of where we come into, turn up, go sideways, and then at some point, probably, we'll figure out, I guess, with the Fed next week, what's next. Right down the 50% retracement from that low would be 2094. Then anything below that, I would be like, all right, this is definitely choppy again, and you have to be very, very careful on your prices. So if it could hold just say above this 2100-ish for a little while, that will keep the longs on their toes that they have to get in quicker, and shorts, if they're rolling it up, they better be careful for continuation. So we'll see what happens. But overall, nice 3-day move. Now the question is, was today's high the pivot? All the bears are saying, we talked about this actually on I think Wednesday also, that you have a potential head and shoulders top in the making, where that's your left shoulder, that's your head. When it was here and I was long those 6 positions, I'm like, let's at least get a bounce back to here. Okay, we got it. Now the question is, does it go sideways and then turn down and create this head and shoulders top pattern, or does it hold higher, show some commitment within that range for the next move up? So that's what we'll be figuring out over the the days ahead. As far as the Russell, what did you do today? This was stronger yesterday, actually cleared a few levels that some of the other indices have not, and all in all, inside day. So I would say as long as it stays above, just say maybe option expiration wants to pull in a little bit towards 125 or not, you'll see if this holds. If this holds going sideways, perhaps next stop here would be highs. IBB also showing some leadership, trying to break above this spot. So the IBBs and the Russell, in my opinion, looking pretty healthy. And this hasn't even really had a sustained move yet. It's been going sideways now for about a month. So this was your reversal yesterday. Remember, it was weaker, then it came up a little bit. The high here isn't too far away. That's 374. The bank's still very strong. XLF, you can't really argue with an upside tape when the banks are trending like this and the XLF near the highs. On Tuesday, I talked about all the 8 and 21-day moving averages in Goldman, Morgan, JP Morgan, how to buy the pullback. Okay, buy it on those moving averages that have been holding, so this way you could, if the market goes, you don't have to chase momentum. And Goldman Sachs, again, pulled right into the 8-day. Boom, this thing we go over almost every other morning call. This was one breakout. Here was your next breakout. And it's been riding the 8-day ever since. No reason to short any of these banks. I don't think anyone really on our VTF has been short, just a matter of whether you could sit long or not. JP Morgan's been, a rock star since earnings. We talked about the pullback to the 8-day. Look what happens if you would have bought this with a nice red dog reversal pattern here on Tuesday. Traded below the low here. The low here was 66.81. So 66.81 came back above it. You could have been a buyer there with the stop at the low here, 66.47. Okay, so that was about, what, 30 cents worth of risk. And here you go, 3 days to the upside with pretty much no pain. That's how you can make money. Retracement, reversal pattern, boom. And then you could even add it when it took out this pivot. So if you didn't want to just buy momentum, you could have, bought the dip, added through here, sold some strength, and then held what you had in the hole. And that's how you use a tier system that I talk about on Twitter so often. As far as some other names, Apple came off highs. I don't think it's means it's over there, but it just seems as if you had your reversal here. Okay, timing matters at a 126.83. I did take this home long, held it yesterday, and sold it today. You have a bit of a topping tail. Doesn't mean end of the world. It just means that it pushed through this little trend line and couldn't hold it. And after 3 days, Apple's been choppy. So now you'll see, does it hold in here? Can we get a red dog reversal the other way and go a little bit sideways? So we'll see what happens with that. Overall, still, this is a range. It's not leading the market. It's not really so compelling, but there are some trades. This 3-day trade was the same thing as the market 3-day trade. Actually, it wasn't even as powerful, but it was something to do. Netflix took the day off after, pretty explosive move. Still hasn't announced what type of split yet, so wait to see what happens on that. Maybe it flags again. It's been holding this 8-day the entire time. It's a little extended, needs to catch up. Amazon gave you a big 3-day move from the lows. Still no momentum at resistance, but maybe it holds a little higher this time. Here was your red dog reversal. Look at this. Your red dog reversal right here, 421.42. You could have bought there with a stop at 419, about $2. Made decent money that day, held it just for a day and a half. If you did that, even better money. And if you said, okay, still looks good, let me give it a chance for another day. And, that's a big move for Amazon. So from lows to highs, okay, not the end of the world that it didn't break out and continue. So now maybe I'd like to see with option expiration and pull in maybe to right around here. And then next time, hold higher, stay in here. So the next time it tries to break above this 438, 439, it doesn't look back. But overall, that's the frustrating part of this market is here tried to break out, failed. Here tried to break out, failed. Here looked great. This is when I was, long the biggest size of Amazon I've had in a while. Got stopped out there. Thank goodness I didn't hold all the way to there. So the cleanest moves are the missed moves or the false moves. So everyone who thought it was going to break down here got stuck, and now you got to see if there's consolidation before going again. Google, I guess something to be on the radar, maybe. Pop back up into this range and still, I guess one day, I don't know when, if it ever has real. I said real a few times because I mean it. Lots of volume to get above this before you could trust it. Right now, it's still just not compelling in a range type trade. In social media, I'm sure everyone's talking about Twitter right now. Twitter, didn't really give you any clues that, that what's his face, Costello was stepping down. And he stepped down, and now it's up $3. So, one rule of that is a lot of people like, oh, Twitter's going to 34, it's going to 33. Twitter's going, back to here, okay? If you're a short, okay, and you like to be short, hopefully, you made your money short and when it broke this area, or you made some money short, maybe even when it broke this little bear type flag. But if you're going to be sitting here short, hoping to, squeeze the rest out of this, when either it could be a potential takeout target or it could be the CEO stepping down, you're a glutton for punishment. Okay, there's no reason to be sitting short here anymore. Just, maybe it could have gone lower, but that's your game. And then if you were sitting in tier 1, because it really didn't give you any clue to be long it, every time you had a little volume burst, it failed, volume burst, failed. So tomorrow we'll see what's going on here. Okay, all you know is that I think it traded to 40 aftermarket, and I guess there's a little point of reference here at a 41. I personally don't think the only reason why you should be buying this is because the CEO is leaving. They're going to be in flux for a while now. It's not like someone's just going to come over and take them out now because Costello left. So if you happen to be in this, I think into the 40, you sell some and then wait for it to reset up. It's going to be the rumor mill type trade moving forward. And if you have some, congratulations. If you're short, you got to figure it out. This is your point of reference. Facebook's been acting better. It did have a little choppy action today. You had your red dog reversal Tuesday, cleared this high here, and now it's pretty much going sideways again. It might chop around for a little while, but ultimately this looks a lot healthier than obviously than Twitter. Twitter might be a better trade tomorrow, but overall, as an investor, this has been the trend to stay with, not that one. And then LinkedIn is also kind of percolating for a trade. It's been very quiet. It's been very tight. You have this island top here. You had a decent trade a week back when you had this day one coming in here, and then you had your gap up, and it's been holding. Gave you a trade this week, and now it's really just so quiet. So if this were to break out above this spot tomorrow or Monday, 219.64, I still think there's another trade here into the gap, but we shall see. You could easily use this as your stop, 215.94 or even 210, depending on your risk. YELP, obviously, just been dripping lower. This is why I don't trade it. I've been sitting in options ever since here. August options, so I don't have to trade this stupid stock. It's been broken, but if something happens deal-wise, I kind of want to be in it. So that's why I'm sitting in options, and either they're a zero or they're going to be good. At this point, I'm not trading the stock. Elsewhere, let's see what else is going on. CYBR priced today at 61. So that's the price. It came in from almost 70-ish. So once this gets absorbed, maybe there'll be another trade. Okay, this looks pretty decent. I think some guys made some money pre-market. It was below 62. You could have bought it, and it bounced a little bit. Now you'll wait and see. FEYE, what you doing? Hanging around. What you doing? Some people are still long this to see if it continues to go sideways and gives you another trade. Last, tradable move was here and then there. Besides to start the year, this and Cyberonics CyberArk have been on my top picks for the cybersecurity space, and they've done very well this year. MBLY posted the chart the other day. Really nice, clean breakout move. It woke up right here. Okay, that was your wake-up call. Then gave you an inside day and then took off today. So hopefully you caught that move. I'm still in some. I sold some strength. It was not the easiest thing to do, a little wishy-washy, but definitely money there. Look at this red dog reversal down here, by the way, guys. Just to show you when things change. This was in a very broken trend last year, downtrend below the 8 and 21 day. Every time I tried to get above, it failed, and then finally, small red dog reversal. I remember that day on the VTF. I think I owned it that day into that for a trade. But anyway, that was 32.72. And then what happened, what made it even change even more, broke this descending channel. So here was your wake up. Quick move showing power, went sideways, held higher, and then now it just based and went again. And I think at some point, why wouldn't this be taking out that high? So as a swing trade, if it's in the drawer, keep it there. As an active trade, use your tier system, pivot 1, pivot 2, sell some strength, and now see what's next. And so in closing, we had a 3-day move, which just shows at least that things can go when they want to. You could have made money short from last week into the beginning part of this week. Could have then positioned big, small, however, for this bounce back. And now chances are the indices hopefully will pack and fill and hold that top third of the range versus just trade back into lower and then turn into this choppy mess where you can't really hold anything for continuity. Traders like trends. They like continuity. They don't like one huge day up, giving back half of it the next day, or a big day down. And if you have a big day down like this, we want a little bounce to continue, not big day down, open up, squeeze back up, go sideways, go back to it. Just that type of trading doesn't get us anywhere. You have to be very quick, and that means you just can't even hold things from day to day. We'd rather hold things for a trend. And right now, you had a nice 3-day trend. So if you got a long Tuesday, added Wednesday, and sold today, tomorrow's Friday, start your weekend early. And don't give back some of the more calculated money when things could be in a bit of a choppy range as we head into the Fed meeting next week. I'm still in the camp September. I don't think it's going to be sooner. One and done would be great. I think it's pretty good, or it's constructive for the bulls that the market's forced these rates higher, and within that, the market didn't sell off. It didn't get scared. It actually bought the banks. So showing you some some appetite and some I guess, what's the word? The market's okay with a little bit higher rates. If it happens to start too quickly and they pull a Greenspan, maybe that won't work so well. But I think hopefully the market learned its lesson from that, and we'll just keep navigating these ranges, looking for relative strength, looking for relative weakness, quick feet, tier system, long, short, preparation, and that's what's been key, preparation. That's what I try and do for everyone in my Redler All Access note. 30 names, support, resistance, pivots, how to maneuver, how to try and benefit from it, and hopefully you're a member of that, and all the other resources at your disposal, whether it's off the charts, which gives you the chart and it's managed by the team, and who really runs it is Evan, and then you have your option specialists. There's something for everyone if you want to look for it, and then if you want to learn how to use it and complement your system, there are ways to make money and create a career for yourself, or just create cash flow to your current existing career. So with all that said, it's Thursday, it's June, go out, have some fun, go Warriors. I do respect freaking James. He's unbelievable, made everyone around him better. I'm a New York guy. I was a Knicks fan. I'm still a Knicks fan, but obviously, you watch guys like J.R. Smith and Shumpert go over there and get brought up where Melo couldn't do it. Just shows you how good teammates and good winning players make everyone better around them. So that's what we try and do here too at the VTF. Traders that have conviction, that have good setups, try and help everyone else get involved. We can't push the keys for you, nor would you want that to happen, but you want to learn why we push the keys so you have the confidence to do it yourself, and then do it more often. And then once you do it more often and have success, then perhaps you'll take more sides, and then perhaps you'll even let the trade work itself out a little bit more. And that's how you grow as a trader and make benefits for your family and everyone around you. I will be in Short Hills tomorrow, so no morning call. Friday's never a morning call anyway. And so I'll be seeing you back here from the studio Monday morning, but we'll be in touch on Twitter. Have a good night.